Hello, and welcome to another episode of Full Court Finance here at Zacks. I'm your host, Ben Rains, and today we're taking a look at two under-the-radar stocks to consider buying to profit from the long-term Wall Street Megatrend that we'll dive into in a second. But those two stocks are Hubbell and Willdan. But before we get into everything, remember to subscribe and leave a review wherever you listen to your podcast, and make sure to check out our Zacks.com/promo page for a look into some of our services, portfolios, and more. So the two stocks we're looking into today that are pretty under the radar, and they also have strong Zacks ranks, are part of the multi-trillion-dollar, multi-decade infrastructure spending boom that has a chance to become one of the most dominant trends on Wall Street. The new age of infrastructure ranges from everything from AI data centers and semiconductor plants to next generation nuclear reactors to revamped electricity grids alongside more traditional infrastructure projects such as road and railway construction and everything in between. So compounding megatrends across technology, energy, deglobalization, and more create a potential kind of once-in-a-lifetime opportunity for investors to ride this long-term, wide-ranging infrastructure spending boom from now and going forward. So there's already trillions of dollars flowing into the next generation of infrastructure driven by some of the most powerful forces, including the U.S. federal government, technology giants like Microsoft, big banks like JP Morgan Chase. So this is kind of the backdrop for why we're looking at two of these stocks today. And as I said, if this is a subject you want to dive into, you can certainly do more research on just these broad mega trends. And this includes, as I said, energy and deglobalization, so reshoring, technology, all of this. It's really thing that's worthwhile looking at if you want to do some more research into this trend and how it could be kind of one of the key trends on Wall Street over the next 10 plus years, if not longer. So with that in mind, we're going to take a look at the first of our two stocks today, and that is Hubbell Incorporated, which trades on the ticker HUBB, so HUBB. Hubbell is a Zacks rank number 2 buy stock at the moment. That's a manufacturer of utility and electrical solutions. It topped our Q2 earnings per share estimates in late July and provided upbeat guidance once again. It's growing alongside the rapid expansion of data centers to fuel the AI revolution, along with electrification, grid modernization, and the broader energy transition. So let's dive a little deeper into the company. So Hubbell is a leading utility and electrical solutions manufacturer with a pretty impressively established track record. It's also, as I said, riding that once-in-a-generation wave of momentum driven by grid modernization, electrification, data center expansion, and the broader energy transition. Its products are essential to building and maintaining critical infrastructures across data centers, power and utilities, renewable energy, and beyond. It grew its revenue by an average of 14% during the past 3 years, and most recently it grew its adjusted Q2 earnings by 7%. The company also raised its 2024 outlook, saying, quote, with its CEO saying, quote, robust project activity drove strong sales in data centers and renewables as our vertical market strategy continues to gain traction and differentiate Hubbell with our customers. As grid modernization and electrification drive investment in utility and electrical infrastructure, Hubbell is uniquely positioned to continue achieving differentiated and sustainable outperformance for our customers and shareholders. So it beat, as I said, its most recent beat and its upbeat outlook helps it earn a Zacks rank number 2 buy, with it projected to grow its bottom line by 7% in 2024 and then another 8% in 2025. And then on the top line, we're calling for about 8% revenue growth in 2024 to get up to about $5.8 billion, and then another 5% growth next year to get up to $6.1 billion. And this would come after about 9% top line growth last year, 18% top line growth the year before that, and 14% top line growth in 2021. So a really impressive streak for Hubbell that shows, as I said, these broader mega trends that are slowly going to play out over the coming years and coming decades. Its earnings revisions skyrocketed starting back in 2021 and then really went on a big run in 2023. They've cooled a little bit recently in 2024, which has helped the stock cool off. But as I said, its recent upbeat revisions help it land a Zacks rank number 2 buy, with its outlook for 2025 earnings still 5% higher than it was this time last year. And this is after soaring in 2023 as well. So Hubbell has crushed our Zacks industrial product sector and the S&P 500 over the past 20 years. It's up 790%, so nearly 800% versus the benchmark's 420% run, and its sector's 160% climb. More recently, it's climbed about 110% in the past 3 years, yet more recently, it's now neck and neck with the S&P 500 during the trailing 12 months. It's fallen about 6% from its early April peaks, with the stock now trying to find support at its 200-day moving average. So in early September, it bounced right off its 200-day for about I'm looking at my chart right now, it looks like it's bounced off the 200-day roughly 3 times in the last month plus. So that seems to be the line in the sand the bulls are going to hold. So it's hopefully going to be able to break out of a little bit of a trading range it's been stuck in, as I said, at the moment, but it's still trading roughly 6% below its all-time highs from early April and at about neutral RSI levels. In terms of its valuation, it's trading near its 10-year median, despite, as I said, that impressive run. And it trades roughly in line with the Zacks machinery electrical market at 22.8 times forward 12-month earnings. That valuation is impressive considering that Hubbell has more than doubled the market over the past 10 years, or doubled that market I mentioned, the Zacks machinery electrical market, up 235% over the past decade versus 86% for that peer group that it's in. And on top of that, the company is paying a dividend that's yielding about 1.2% at the moment. So certainly a stock worth considering. Diversified portfolio. The stock has cooled off recently after that impressive run, so it's certainly worth considering looking at Hubbell at the moment. And now we're going to take a look at Willdan Group, which is another company that's going to play these broader mega trends across infrastructure spending, and this is a company that trades under the ticker WLDN, Willdan Group. So Willdan provides professional, technical, and consulting services to utilities, government agencies, and private industry. Its offerings span from electrical grid solutions to energy efficiency, sustainability, engineering, and beyond. It's sitting, like Hubbell, in a sweet spot across various key trends in those broader infrastructure megatrends. It stands to benefit from the attempt to rapidly transition away from fossil fuel as energy demand booms. The U.S. is also, as we mentioned off the top, it's kickstarting that multi-decade, multi-trillion-dollar kind of revamp of the economy. So Willdan's set to play a small role in this because it is a small cap company, but its pitch to clients and investors is essentially that it, quote, transitions communities to clean energy and a sustainable future. The company reported blowout beat raise second quarter in early August, and it grew its adjusted earnings by 112%, with contract revenue up 18%. The company raised its 2024 guidance once again to between $2 and $2.10 per share, which crushed our estimate at the time. It also said last quarter that it landed a few key contracts during the period. It's now working with Facebook parent Meta to, quote, study emissions related to voluntary clean energy procurement. It also landed contracts with the state of Virginia to, quote, perform analysis of grid impact from increased energy demand, and the city of Paramount, California, for solar storage and EV charging infrastructure. Then most recently on August 8th, so not too long after it reported, it said it landed a deal with the Clark County School District, which is the 5th largest school district in the United States, for a $102 million contract to deliver energy savings projects across its 204 schools. They're trying to retrofit and upgrade to save the district money. So that's kind of the business they're in. They're in the consulting business overall. And if we look ahead, we're calling for 10% revenue growth this year to get up to about $560 million, and then another 6% revenue growth next year to get up to about $591 million. And then at the bottom line, we're calling for 20% adjusted earnings growth, and then another 12% adjusted earnings growth next year. And this would compare, if we're looking at the top line, the company did 19% revenue growth last year and then 21% the year before. So doing another 10% this year and then about 6% next year is really impressive going forward. And then it's crushed our estimates on the bottom line over the last 4 periods by an average of 82%. And its upbeat earnings revisions landed as Zacks ranked number 1 strong buy at the moment. So its overall 2024 estimates up 12% since its last report, with its 2025 estimate 18% higher. As I mentioned, it is a small cap stock with a market cap of about 520 million. It's also relatively lightly traded, an average volume of about 115K. That said, its shares have soared about 75% in the past 12 months to blow away its Zacks sector and the S&P 500. Overall, the stock has climbed 1,200% during the past 15 years and 180% in the past 10. And despite surging off its 2022 lows, it's trading 30% below its 2021 peaks and roughly 32% below its average Zacks price target. And then on a technical front, Willdan is back above its 50-month, so a really long-term 50-month moving average. It's also trying to find some support near its 21-day moving average at the moment, while trading at roughly neutral RSI levels. And then in terms of valuation, it's trading near its 10-year median at 19.4 times forward 12-month earnings, and roughly in line with its industry despite a long-term and near-term outperformance. So both Hubbell and Willdan stocks are relatively under-the-radar ways to play this broader infrastructure megatrend that a lot of people, including JP Morgan and Goldman Sachs, see as one of the kind of big trends that's going to be a part of the economy and Wall Street for years, if not decades to come. So certainly worth taking a look at these two highly ranked under the radar Zacks stocks to play the broader infrastructure megatrend over the next several years and coming decades. So that does it for this episode of Full Court Finance. Until next time, I'm your host, Ben Rains. And remember, if you have any questions, please feel free to shoot us an email over at podcast@zacks.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.